Hey everyone! After watching this video, you will be one step ahead of mastering the art of trading and get the freedom which we all pursue. Today, we are going to focus on fundamental and technical analysis, what they are, the factors they consider, and the impact they have on the market. Let's dive in. Fundamental analysis. In this step, we will explore fundamental analysis in detail. There's a common misconception that fundamental analysis is simply trading during news events. This isn't true. Trading during news is possible, but it requires specialized software and skills. Fundamental analysis involves examining various economic factors of a country and comparing them with those of another country. This type of analysis is typically used for long-term trades ranging from 3 to 6 months, allowing economic indicators to influence the currency value. The goal of fundamental analysis is to understand not just the market's direction, but also the underlying factors that drive these movements. This method predates technical analysis and was once primary way to study the world's capital markets. It's more complex than technical analysis, requiring consideration of numerous factors, each evaluated for its impact and duration. Financial factors. First, let's look at financial factors, interest rates and inflation rates. Interest rate, this is the cost of borrowing money, expressed as a percentage of the principal. It also applies to the returns earned on deposits in banks or credit unions. Simple interest is common in mortgages, while compound interest applies to the principal and accumulated interest of previous periods. Lower risk borrowers receive lower interest rates, while higher risk loans come with higher rates. Inflation. Inflation measures the rate at which prices for goods and services rise. It provides a single value representing the overall increase in price over time. The Consumer Price Index and the Wholesale Price Index are commonly used to track inflation. Interaction of interest rates and inflation. When a central bank reduces interest rates, borrowing becomes cheaper, leading to more loans and increased spending, which simulates economic growth. However, this also increases the money supply, causing the national currency to depreciate. Conversely, higher interest rates reduce the money supply, attract foreign investment, and strengthen the national currency. General economic factors. Let's move on to general economics factors. Construction permits. The number of new construction permits is a leading economic indicator. More permits suggest confidence in future business conditions, while fewer permits indicate a lack of confidence. Consumer Price Index, the CPI, measures the average price changes of a basket of goods and services essential to consumers, such as transportation, food, and medical care. It's a key indicator of inflation or deflation. Unemployment rate. High unemployment means more wages are paid, increasing spending and tax revenues, which can lead to inflation and stronger national currency. Changes in unemployment rates also influence consumer behavior and economic outlook. Trade balance. This measures the difference between a country's exports and imports. A negative trade balance, more imports than exports, can decrease the currency's value, while a positive trade balance, more exports than imports, can increase its value. Gross domestic product. A higher GDP indicates more production, consumption, and investment, leading to a stronger national currency. Conversely, a declining GDP weakens the currency. Political factors and disasters. Political stability. Political stability is crucial for a strong currency. Elections and political uncertainty can cause market fluctuations, as investors prefer stability. Political instability generally weakens a country's currency. Natural disasters and wars. These events have long-term negative impact on the economy and the national currency. The severity of the disaster correlates with the negative impact on the currency. Conclusion. This was a brief overview of the fundamental analysis. There are many factors to consider, but these are some of the most important. Remember, avoid trading during news events due to potential market manipulation. Now, let's move to the more important part, the technical analysis. When we know all the factors of the fundamental analysis, we have to jump on the chart and see what the charts are telling us. But before that, to understand them, we have to know the market structure. What is trend, range, choppy market, and levels of support and resistance? Trend is the general direction in which the price of an asset is moving over a specific period of time. Trends can move in three directions: upwards, downwards, and sideways. Let's start with the upward trend. The price consistently makes higher highs and higher lows, indicating a strong buying interest. Downward trend. The price consistently makes lower highs and lower lows, showing strong selling pressure. When we have range, the price moves within a horizontal range, neither making significant highs nor lows, indicating a balance between buyers and sellers. Identifying trends is crucial because trading in the direction of the trend generally increases the chance of successful trade. The saying "the trend is your friend" captures the idea well. There are periods when the market creates huge spikes and also price creates huge wicks on the both sides. This is called choppy market. I suggest when you see situations like that, just stay away of the market or be really careful. In trading, support and resistance are key price levels where the market tends to reverse or pause. Support: this is the price level where a downtrend can pause due to a concentration of buying interest. It's like a floor where the price tends to stop falling and might start rising again. Traders often look for support levels to enter long positions. On the other side, resistance: this is a price level where an uptrend can pause due to a concentration of selling interest. It acts as a ceiling where the price tends to stop rising and might start falling. Traders often look for resistance levels to enter short position. These levels are crucial because they help traders identify potential entry and exit points, and they reflect market psychology, where traders feel comfortable buying or selling. Let's move to the strategies. There are many different types of strategies that different traders use. So we are going to summarize them as trend reversal strategies, trend continuing strategies, advanced strategies. You can join my inner circle where not only I post analysis, expectations, and trades, but you will find full videos of how to use my top 3 strategies with which I make profits from gold every day. Let's move on. Intraday trading strategies and fast earning money strategies. I know that this sounds very tempting, but of course, these are the strategies with highest risk. You can check full videos of 9 of the best strategies in my YouTube channel. There is a link below. Go and watch them. Now, when we know the basics, let's directly jump on the chart so I can show you how to properly make a top-down analysis and how I start trading every day. Okay, let's jump on the charts. This is gold to US dollar because now my focus is only on gold. Let me show you how I analyze, how I make a technical analysis, and what I do every morning when I sit in front of the charts. First, I go on a weekly time frame just to see how the previous week candle closes, just to see the potential bias of this week. You can see here there is a very nice rejection, and this candle closes with the breakout of the first rejection. So probably the bias is still bullish at this moment. After that, this week also met a rejection here, so potentially for me the bias is bullish. We go on a daily time frame, and first thing that we are seeing is that there is a huge impulse, and after that the price starts to move sideways. First thing that we are seeing is a very good support zone. You can see first, second, third, fourth rejection, and after that the price made an impulse which breaks all the 2 previous tops, which for me also means that the price is bullish at this moment. The next thing that I'm going to do is to draw a simple trend line here and see that the price made an impulse, after that made a correction, second rise, and another rejection on the trend line, which ended with a huge engulfing candle. That means again that the bias is absolutely bullish right now. So we have a weekly bullish bias and a daily bullish bias. Let's jump on a 4-hour time frame to see what we have. Again, if we start to draw the trend lines, we can see that we have a breakout and a test. Also, of course, another rejection on the trend line, which was on the daily time frame. So you can see this top didn't break the previous one, and the bottom also didn't break the previous one. So the price is like a consolidating at this moment, but we have a confirmation on the weekly and the daily time frame that the bias is bullish. Also, we have a breakout on this trend line, rejection from the huge trend line. So we are going to wait for potential retracement or just a continuation of the buys until the previous tops, at least. Let's move on 1 hour. And and here I want to show you something. And here I want to show you something. And on 1 hour, again, we can draw this trend line to see. You can see how perfectly it breaks, test, and now there is a continuation of this bullish impulse. The other thing that we might do is to try to draw something like that, but this is too inclined, so it's more like not okay. We are looking for some trend reversing figures based on the strategies that you're using. Trend reversal figures or trend continuation figures. If you don't know strategies, go to my YouTube channel. There I have 9 of the most popular strategies that you can use. So I will not jump into the lower time frames. If you want to understand how I trade or how I make my entries, you can join my inner circle. There I explain the strategies that I am using and entries that I jump into. So guys, technical analysis depends on the strategies that you are following, but in every situation you have to start from the higher time frames and go down to the lower time frames to see, so you have a perfect eye on what is happening at the moment. Stick to the strategy that you are following. Check the different time frames to determine what the bias is, and don't trade during news.